Good evening. This is the Elliott Wave weekly update for the Dow Jones 30 and the Russell 2000, being recorded on Saturday, April the 5th at 4:30 p.m. Pacific Daylight Time. Starting here on the maximum monthly chart, so all the data that I have for the Dow, I went back and I'm reconstructing things because of the strength that the market showed Thursday and Friday in terms of downside. And so undoubtedly, we saw a little bit of panic. Undoubtedly, we saw volatility start to reach historic highs and puts overtaking calls in terms of purchase. And it's at one point on Friday, this is all in the SPX, I saw 2-to-1 puts over calls. And so a lot of that was basically the marketplace just in a panic a little bit. And so what we were witnessing was just a lot of put buying, of course. And what happens when that goes on, it's the dealers. The dealers are having to sell the puts. And so the hedge is selling puts, selling the market, selling the underlying. And so it starts a chain reaction when that purchasing pushes the volatility up because the demand for the puts grew exponentially between Thursday and Friday. And a lot of puts were moved out. And what you can do is like really kind of what I did as well in the SPX. I went and I just looked at the SPX options, and I went to actually next week, next Friday, and you can start coming down 3,800 in the SPX, 3,800, 15,000, 4,000, 19,000, 42, 39,000. I mean, this is like, are you preparing for a collapse? Yes. That's what they're trying to do. Hedge against an all-out collapse next week. This is the SPX, closed at 50.74. Look at the size that's trading here. So 39,000, 4,200, 24,000, 4,300, 12,000, 13,000, 4,400, 20,000, 4,500. And then we can just keep going up. 48, there's 15,000. 48.50, 8,000. 4,900, 11,000, almost 12,000, actually too short of 12,000. And then, it keeps just collecting. And then at 5,000, 19,000, in addition to what was already there. This is for April the 7th. We're not even going out to the April expiration where there is a large amount. And so as we start to break below, if we break below 5,000, we all need to have an understanding is that there's a tremendous amount of support right at 5,000. And below, there's a lot of gamma sitting. And so there should be support all the way down. And now we've got all these puts lining up here. Now, whether they were shorting the puts or whether they were buying the puts, it doesn't, they're just puts were trading, massively trading. Now, what did it do with the Dow? The Dow was down almost 2,300 points on Friday. And I think that was the cash. The futures market ended up down 2339. So, the Dow itself, 2230. The future was down 2,300. And that really came after the close. So I switched around here. I had left this before. It was the primary degree, and I pushed primary 3 up to where I have it actually in the other markets as well. And it just lines it up a lot easier, and it makes it cleaner as to what actually the Dow is doing right now. So let me bring this down to a 10-year weekly chart. And here I have it again, where this was a little bit different. and putting us in from here, I believe it would have been, I had this as intermediate wave four, and that we're an intermediate fifth wave up, and that this was minor wave three, and then we're doing a minor four. Well, it got pushed pretty far on Friday. So I thought, So I took a stand back and I took a look and I readjusted to put it more in alignment to what the SPX and the NDX are doing. And that is that the primary wave three was at the end of, or the very beginning of 2022, that high. And the primary four was October. So that low. And from there, we started to boost everything on rate cuts and hopes and dreams and everything else. So even with this count, it takes into effect all that we're doing now. It takes into effect the severity of the drop. It takes into effect that there is still a possibility, and it's picking up a lot of weight, that this might be up, this fifth wave might be up here. And if that's the case, then what we're really starting to drop in, as I discussed in the S&P, as I discussed in the other markets, it would be a cycle fourth wave correction. And that we finished up at those highs was the cycle third. Now, those of you that maybe have been following me for a year or more realize that when I first was launching my analysis on YouTube, I had put the cycle wave three here, and that we were working on a cycle fourth wave here. And I held that until, and this would have been A of cycle four, A of primary, wow. It would have been primary wave A of cycle four. And I was looking cycle corrective wave cycle four, and I was looking for a B wave. Well, once it got past 1.382, that got blown out, and I had to reduce and rethink what we were doing. So I decided to change it again and take it out of the minor third and bring it up to an intermediate degree third, and we're coming down an intermediate fourth wave. So let's start to bring it down. And I'm going to take it to the daily. So here again, we have intermediate wave three. Let me bring that down just to show a little more. I don't know what happens because I move it up and they move them, and I got to go bring them back in. So those fibs got adjusted down to the intermediate degree, of course, and you can see that where we came on Friday, just shy of the 50% marker. Now, what's the most common for a fourth wave is 382, and that got sliced pretty much on the open on Friday. Now inside, so here is minor A of intermediate four, minor B of intermediate four, and trust me, I noticed that it should be a flat, which means it should have stopped there, but it didn't. So either I move the whole thing over again, like I've done in the S&P, and then this gets moved up again, so that really was three, this was the four, this is the five, and move three over here. That may happen too. Then this is A, this is B, and then here are the markers that would be for that C wave. Still, I'm just looking for what the possibilities are within minute wave three. But if I move this over, which is very, very tempting, even as I talk, to put all the markets in alignment and doing the same thing, in terms of they finished the third, and this is the minor A of four, minor B of four, and we're in the minor C wave, and that already is getting past, should go past 50%. But if this is C, then it's 1, 2, 3 of C. We've got a fourth wave, and then we're going to come down in a fifth, and we're likely going to come into here. So how quickly we got to 3,800, when for the longest time I was thinking, wow, we might not even get below 40,000, but maybe we'll hold above 40,000, and bang, bang, in 2 days. Took that out, took out the 39,000 level, and got down to 38,250. It was pretty amazing. It was very, very amazing to watch. Now, what's kind of going on? Again, let's go back and let's just bring in the volatility picture a little bit here. Volatility raced higher. panic higher, fear higher, reached 45, closed above 45, actually, 45 and some change on Friday. And if we really got to look at this, let me add some of the conversation that volatility or volatility in general, vols, are getting to historical high levels. And that is suggesting that the ones that are holding these puts, they should begin to have a real solid reason as to why they're doing it. And so either, my thought is, either they're hedging a portfolio and against additional declines, or they're just straight out betting on the downside. Now, either way, the puts are very expensive because of the volatility. The puts are very expensive because the volatility is going up because of the demand. Demand. Now, I'm just going to share a little bit. Is like when I was an options market maker, and this is going back to I actually was trading in Amsterdam, and it was just after Saddam Hussein had invaded Kuwait, and there was panic because oil went nuts, and there was panic that there's going to be this big Middle East war, and that it would really cut off oil to everybody, because he was invading Kuwait. So in advance of that offensive that George Bush the first put together, the coalition, and it really on the day that they opened up and started their war, it was done basically. There was no response from the other side, from the Iraqi army. But in those that the invasion happened in August, and the rest happened in January of 1991. And up until that point, there was a lot of fear, there was a lot of pushing of volatility, and there was a lot of demand for puts because we did not know what the resolution or how severe this could or could not be. So, as a market maker, people come in, they're asking for a bid in the puts, a bid and an offer in the puts, and you would make an offer, they'd say buy them, and then they would say buy 50, buy 100, buy 500, and it's like no, I'll say smaller, and then I would move the price, and they'd say buy them, and they just filled that order. So the puts, because of the demand, got marked up very, very quickly, and the volatility, of course, it just exploded very, very quickly. And that wasn't just in the front month; it was in the back months. It was across the board. Now, so same type of a deal, not because we're confronting a war, though you never know, um, but because of these tariffs. We are actually declaring war. We're declaring a tariff war on China, the European Union, Canada, and Mexico. All of the trading partners that actually took years to produce these agreements to build a global economy. Well, I guess our president does not like that, does not think a global economy is a good idea for the United States. Not sure why, but I'm sure he has its reasons, and has decided that within the first 45 days of his second administration, he has torn it all down by these trade wars. Now, I don't know what the outcome is going to be. He seems to think it's okay. He seems to think, yeah, we might, but yeah, it's going to hurt a little while. And while the markets are tanking and going crazy, he took Air Force One and went and played golf. So, it's kind of bizarre. It's kind of bizarre. You'd think that he might be at the helm and trying to figure it out. But instead, he's like, well, I'm going to just keep doing these trade wars, and I think the market sliding is just fine because it's going to force the Fed to lower rates. Well, if we listen to what Jerome Powell talked about on Friday, he talked about that the independence of the Fed from the government, that we act independently and we intend on staying independent. We will not be forced into a situation or told by the administration what they need to do. They have their models, they have their plan, it's been enacted, and then they're sticking to it. So, bravo, but we'll see what actually happens here. Because at the same time, if we're going to talk about treasuries just for a moment, Fed funds against the 2 year. They're beginning to invert again. That's not a good idea. That is rates going up, not rates going down. So we're starting to see a little bit of tension from the treasury markets, right? Because we got the 30, we got those, the 10, and they have seen a huge influx of money, right? Flight to safety. And that actually pushes the rates, the yields down. Bond price goes up, yields come down. The rates have not changed. So the Fed is in control of the rates via the Fed funds. And those are like T-bills and things of that nature. But the Fed funds is where they'll lower and then they set the range. And then it goes to the T-bills and then it moves out. And eventually they're trying to not reinvert, but turn it back the other way, where the 30-year is the one where your interest rate on the near term should be just maybe a little bit more right now because they need the money. But we're looking for that inversion to kind of flip again. And so we'll see. We'll see the whole deal. In the meantime, I also want to just add that this is via the SPX, so I don't know the equivalent level that's going to be here in the Dow, but SPX 5000 is long-term support because it's given via that there really is massive open interest at 5,000. And you kind of got to move out and got to look because you go month by month by month, or even week by week, and you can see 5,000. It's got quite the buildup. And so I'm looking at it this way. So anything less than something really bad, something really not market pleasing, market jarring, were to come out this weekend, I have to think that put values are about ready to get crushed because volatility will immediately start to get pushed lower, quickly pushed lower. I.e., example, Friday, it zipped up to 45. And then suddenly we started to rally, just a bounce, but we started to rally and it went from 45 back to 41 real quick. Then they started to drop it and they started taking it to new lows, and bang, there it sits again at 45 plus. So it does seem like it's pretty ready, pretty ripe for what market makers and everybody else starts to call a dead cat bounce. So that's a strong possibility. And if it comes, it's going to give an opportunity for dealers, the market makers in all of these options to unwind a lot of what took place Thursday and Friday. It lets them buy back that put and release the hedge, which is to buy the underlying. So that on by itself could really start to push and give us that serious bounce. And if that were to occur, now we're going to go back to the chart here, that here's intermediate 3. There's the minor A of 4, minor B of 4. We're in the minor C of 4. Here's 1, 2. That's minor. I actually should have put that in. I didn't. I'm sorry. Minute 1, minute 2, minuet 1, 2, 3. And I'm actually thinking it's like it's going to be a little bit different. I think I maybe go down and just hold on. I meant to do this, but I didn't necessarily get into it. If I'm going to put minute wave 1 here, minute wave 2 here, minuet 1, 2, and then we're going to break it down. 1, 2, 3, 4, 5. Yeah, this actually I'm going to move this up, not remove it. I meant to move it up. Oh, yeah, yeah. I apologize because this just makes them much longer than I want. I'm going to put the 3 there, the 4. No. The 4 here. And then put the 5 in so that the minute third is what's finishing, or possibly has finished down below. So let me just set this up real quick. And then I'll put that other one in, and then I'll show you the whole thing. and then put, oh, come on. This is what happens when I rush. Come on, thank you. And put the 5 down here. And then also put the 3 underneath it. And then, oh, come on. And go from there. So again, if this is going to be minute wave 3, then what we're looking for is a minute wave 4. And that's the one that could get us up to these levels. So I need to just change that color a little bit as well. And just put this here, put that there, go to here, go to there, mark it down, and we move along. And then change this to that. Now we're set. Okay. So now, there we go. Minute 3, I'll put that 1 and 2 in, and then we have minute 3. And this needs to also change to this color. So that would be for that third wave that we're just getting ready to finish. It's going through 100. If there's follow through, that's the depth. So if it got really ugly, yeah, this thing could extend before we get that bounce. I'm hoping that it doesn't. So far, so good. We've not gotten any serious news from anybody, but then tomorrow is when they might want to start bringing it out in terms of retaliatory, in terms of just other things that might be coming from the White House. In any case, I am going to look for this bounce, and I think it could be a fairly good bounce. If we're looking at it over in the S&P, in the ES, we could get back to 5,300 pretty quickly. In the SPX, we could even get up to 5,400 pretty quickly, and it still would be a minute fourth wave over there as well. And that is minute wave 3 of minor wave C of intermediate wave 4. So that's how I am looking at this. Hourly chart, nasty. Everything in alignment. Everything's in alignment. If I'm going to push this out to the daily, everything is in alignment. Except I still, on the Dow, believe it or not, this is the cash Dow, the 50 is not below the 200. Interesting, with all this heat the market has been taking, the 50 is still sitting up there. That's interesting. Heading down, but still sitting up there. And the 20 broke probably on that gap last week. So, but I'm still thinking we get that fourth wave bounce, minute wave 4, still come down. And here are the markers again. This is for the downside. These are for the upside. So we have 39,236 or 235, whatever you want to call it, 39,860, and 39, yeah, this is 995, 39,850 and 39,820, yes, 20 to 50 here. And then we have 40,325. That would be the 50%. And again, this would be 1, 2, 3. So we can't go above that 40,640. So I'm actually thinking 382. But again, that from where we are would be a very strong dead cat bounce. So that is the cash market. Let's go just take a look at the YM and see what we got. Here I actually did put it all in. Minute 1, minute 2, minute 3. So you got 1, 2, 3, 4, and it all happened inside there. And I can show that to you by going here. Here you can see it. There's the 2, 1, 2, 3, 4, 5, minute 3. So here, we're going to run our fibs from there and to here. And here's a little bit different, but we should be able to tell pretty quickly. And we're going to put those curves around, and we're going to call this like this, there. And we got 2, 3, 6, 3, 8, 2, 5. And let's just get rid of the rest. I don't need that, and go here. So we have 39,445 to 450, 40,154, 40,726. That would be a real dead cat bounce. And wave 1 sits up here. at 41,140. So I'm thinking actually 40,000. That's taking back the 2,000 plus that we gave. That would be pretty good. That would be a very strong bounce and allow a lot of adjusting that took place. Now, I don't think anybody's really believing that that's it and we just start to rally, but you never know. I would not take it as such. There's still way too much going on to think that we just give up everything and now that finished it and we just start rallying it. Even the count tells us that that's not correct. So we still have A, B, 1, 2, and we can, once we get 4, I can run it again, and we're going to get numbers that are going to be kind of low. The A, the B, so the C wave passed through the 1.882. Its next level is 35,998 or 36,000. That's its next level. Fib 618 is 36,819. I'm hoping that actually contains the whole thing. I can go back out to my daily, and I need more. Let me go to the weekly. There's wave 1. Still out of the way. So we could get down to 36,000, and it's not going to be overlapping wave 1. And that's a good thing. So these are also still out of the way and not overlapping wave 1. And that's the ticket not to do. Don't overlap wave 1. So that's what I'm looking for here in the Dow. And here again on the daily, we got 50 just crossing over the 200 on Friday in the futures market. That's pretty wild. That's pretty wild. The other ones, I mean, this is all the way down, and the 200 is like falling, rolling over as well on all the dailies. So that's very interesting. All right, let's go over and take a look. By the way, we're very oversold, very oversold. We're coming in at 21, so anything below 30 is considered oversold. So you can see it turns that lighter shade of blue like, hey, and very much more oversold than we were at the bottom of wave 1, as we're at the bottom of wave 3, and we're way down, even unregistered. All right, over in the Russell. Now, if you remember, it's like, again, if you've been following me along and I'm talking in the Russell, I'm like, gee, I don't know what would get it down to here. Remember that conversation? I do. And then here we are. Here we are. Now, just to kind of recap where we're going with all of this, and let me go out to here. I think I got to go out to my 5. Yeah. I know they're all out of place, but that's because of the contract roll. But we had that, this is wave 3, and then we have we're looking for that wave 4 decline, the intermediate wave 4. So this one's a little bit ahead of everybody else that they're putting it in right now. And this is minor A, minor B. We're coming down in a minor C wave to complete intermediate wave 4. So others are also looking to complete intermediate wave 4. And now, oh yeah, that's the point. The point was that I got everybody onto the same wavelength, that we're all coming down to intermediate wave 4. Because I just don't think that they're going to run independent, either against one another. There might be slight changes or slight nuances in between, but still, I think that this one, in fact, is built a little bit different because of the minor A and the minor B. Minor A's was in progress for most of 2022, almost up until October of 2023. So that took almost a year, or it took actually a year to unfold. And that high was 2021. So it actually took 2 years just to get the minor A wave. Then we got the minor B, and now we're in the minor C, bringing it back down here to the daily. I think we're accurate here, and that we have minute 1, 2, 3, and 4, and it's the minute wave 5 that's going to be the killer. Right? I think wave 1 is the shortest, so wave 3 is not in any danger here. And there's 4, and here's our markers. We got right down to 17,097. That low was 1,792. And so we ended up closing back up real nicely, 1,832. So, and a nice 40-point rally into that bell. That was interesting. So again, wave four, it's already started its dead cat bounce. So here are our markers. 236 is 1863, 382, 1907. That one looks pretty good to me. And because I don't necessarily want to see it above there. And then we come down in the fifth, and that kind of completes it. And I'm looking for the same thing in the other markets as well. Get the 4 and get the 5 in, and let's be done. But that also tells me for that to happen, I mean, we're doing the dead cat bounce, but that's what it is. It's a dead cat bounce, and the fact that volatility just ran away from us. If that volatility does not calm down, if that volatility gets out of control, if the market starts slicing through these lower levels, then indeed I'm pushing everything up degree-wise, and we're in a much larger degree. And it's unfortunately across the board, it's likely would be a cycle fourth wave. So what we're finishing is not intermediate degree, but we're finishing primary degree to finish the cycle. Cycle wave 3 would be up where these highs are. Where I'm marking those intermediate, it would bypass primary because that primary degree fourth wave has already been put in place in 2022. So we're in primary wave 5 across the board, looking for that to complete. The only other choice I have, if we start plowing through all these levels, is that it was already done. Primary 5, cycle 3, already done. And we're in the first legs down of the primary A wave of cycle wave 4. That's the alternate now. Because of the intensity it's dropping, because of the volatility, because of a lot of things. So again, as I've been talking all along, even if it stays as an intermediate fourth wave, an intermediate fifth wave is not going to pick up steam and just keep going with all of this trouble happening to the country, with a trade war between most of the globe. That's not going to happen. So dismantling all of the trade agreements that have been put in place by predecessors to this president and have actually been operating successfully. Maybe his companies aren't making money, or I don't know. But as far as consumers goes in this country, it's been pretty okay. You know, we've been able to buy BMWs, we've been able to buy Mercedes, we've been able to buy iPhones because they're all made in China, right? We've been able to get a lot of different things out of Mexico, a lot of things from Canada. That's all going to stop. So we become an isolationist again. And so that I think that we shall see. We shall see. There's so much going on, folks. But here in the Russell, I think we got a little bit of a fourth wave to get. It would be minuet. Then we're going to come because we're going to finish this minute wave 5. Those markers remain in place, and the next one is down here. But then we have the C wave, 100% is 16,665. We got another marker way down here. Not really sure, but it's 1,633. And then if it goes beyond that and still comes down, it's coming down in the fifth, and we get to there, that's 1,593. But I'm kind of looking right here, folks, right here, maybe a little bit higher. If we go up in a 4, come back in a 5. If we get down to here, I'd have to switch it around a little bit to see where that 4 is. And then I go 1 to 4. So we'll see. I mean, I think we're getting close, unless something goes wrong. So anyway, that's going to be it for right now. I'll try to keep these a little bit more available because we're in really a lot going on, and I'll see if I can't get these done on a daily basis. But apologize if that's not going to happen because I'm one person and it's kind of getting hot and heavy. Anyway, have a great balance of the weekend.